It was supposed to be sunny today, but it has been pouring dividends, and I found the culprit. We have another beg alert. SCHD shelled out the largest third quarter dividend in its history on September 30th. In this video, we'll dive deeper into those dividend stats, and we'll also touch on that other news item that had SCHD investors licking their chops. If you're new to the channel, welcome. My name's Jeff Teeples, and here we aim to grow your wealth with simple, time-tested solutions. Please Hadouken that like button, subscribe if you haven't already, and drop me a comment down below if anything comes to mind as you watch this video. Before we dive in, we had one new channel member to shout out. A huge shout out to Meta Oracle for joining the channel membership, and a shout out to everyone that's been here all along. I really appreciate the support from you members, and I hope that you enjoy the perks that come with it. You know what time it is. Let's grow. The dividend growth secret. I wanted to touch on an underrated aspect of SCHD before we dive into the two main news stories, which are of course the third quarter dividend and that 3-for-1 share split. I've mentioned multiple times on this channel that SCHD has historically grown its dividends better than dividend growing specialist ETFs like DGRO or VIG. Both of those funds only have one core metric baked into the methodology, and it's dividend growth. It seems weird that a higher yielding ETF like SCHD would grow its dividends at a higher clip. SCHD screens companies that have paid, not grown necessarily, but paid a dividend for at least 10 consecutive years. And then it scores them on the following. 25% of the scoring algorithm is the dividend yield, and then another 25% is the 5-year dividend growth rate. But then 25% is return on equity, and the last 25% is the free cash flow to total debt ratio. The two dividend metrics are well known, and return on equity is also a great key metric. It tells you how well a company is generating income with the money that you invest in it. It's usually a good indicator of long-term performance. But the unsung hero is the free cash flow to total debt ratio. It's critical for dividend safety and dividend growth. Companies that have high free cash flow can sustain the dividend payments when there's bumps in the road. And I could literally say that exact same sentence about companies with low debt. Combining these two metrics creates a powerful ratio that promotes a healthy balance sheet. It creates a balanced mix of stocks that pay and grow their dividends while also having impressive moats during hard times. The floor is high with SCHD. Let's get into the juicy news items. Third quarter dividend. SCHD paid us shareholders just over 75 cents per share at the end of September. This obliterated the previous third quarter record, which was the last third quarter by the way, by 15.3%. I feel like everyone's mentioning like, yeah, SCHD paid a third quarter dividend, it was pretty nice. It's like, this is an all-time high by a huge margin. I can't believe people aren't a little bit more excited about this one. Let's dive into SCHD's dividend metrics right now. I pulled up SCHD out in Seeking Alpha, and I do have a Seeking Alpha affiliate link if you're interested in trying Seeking Alpha Premium for free for 7 days. And if you like what you see, you'll save a bunch of money on your first year, and it helps support the channel. It's a win-win. We're gonna start out here on the dividends tab, and I always start at the dividend scorecard. These figures have been updated with the quarter 3 dividend. You can see the trailing 12-month yield is 3.48%. This has been increasing throughout the year as the dividend has been setting quarterly all-time highs each and every quarter for the year. We have a trailing 12-month dividend growth rate of 12%, and then the 3-year dividend compound annual growth rate is 9.5%. That's very good. That 5-year CAGR is 12%. Imagine if you average getting a 12% raise at your job every year. Just do the math on that, what you would make 5 years later. And how about 10 years later, an average growth rate of 11.1%. So spoiler alert, this thing will double its dividend per share around every 6.5 years. So SCHD's been around about 12 years. You can see it's paid dividends for 12 years in a row, and it's increased dividends each of those 12 years. It has never paid less money than it did the year before. Now let's head over to the dividend growth tab. And I know I show this one quite often on the channel. We're gonna get over to a more elaborate spreadsheet here to look more into the dividends. But just to reiterate, in 2014, we received $1.05 per share. In 2023, 10 years later, $2.66 per share for holding that exact same share. So if you never reinvested a penny, you've gone up to over 2.5 times on your cash flow for each share that you hold over the years. If you're reinvesting, the numbers get wild. Now we're hopping over to the dividend payout history table. So no more charts here. And you can see 75 cents was paid in September. The ex-dividend date's 9/25. And if you scroll over here a little, we'll just do it. You can see the pay date's 9/30. And we received 75 cents a share, just over 75 cents. The previous all-time high for a third quarter was 65 cents per share. That's where we had a 15.3% increase quarter over quarter. And you can see second quarter, same song and dance, even more so. First quarter, same thing. Barely, but we did have an all-time high. So SCHD in 2024 has had all-time highs in each of the 3 quarters. You can see last year's figures were pretty solid here. And then the year before was pretty solid and even a little higher in quarter 2. But, 23 was still pretty notably better. And then as we scroll down here, I won't read these all off, but you can see we've made tremendous progress. This is a per share payout, so it doesn't matter what the price is, completely irrelevant. Yield is a vanity metric, except for the day you buy an ETF. Always remember that. Yield on cost is all that matters for your true value. Dividend yield is just a snapshot in time that only matters that day. And you can see when you scroll way down here, you're in the 20s, you're in the teens. It's been a nice, stable, steady ride all the way up to where we are, and we're producing all-time highs each and every quarter. Now this is cool and all, but I want to show you how crazy and powerful this really is. It's not being emphasized enough in a lot of the videos I see. All right, we're out on my retire on SCHD spreadsheet, and I think you'll appreciate what I've done here. I've added 2024. Now these years typically are not added until the full year is over. So for 2023, at the end of the year, a share of SCHD went for 76 bucks, and you received $2.66 per share of dividend payments. This is what actually happened. There are no estimates in these numbers, and these are the actual year-over-year growths. Starting the scenario to back up, this person at the end of 2012 retired and put $500,000, all their investments they put into SCHD, and this is the real price as of this date. And the $500,000 at that time bought 17,643 shares. They did not reinvest. They started taking these dividends right here. This is the per year dividends, and they spent every penny. They had this amount of shares forever and never touched it. They treated it like a high yield savings account, but just lived on the cash flow. And you can see this is in italics because this is just for information to fill the growth population. This is the first full year, 2013. You can see that they've received $377,000 of dividends. Now, this is just a snapshot of what SCHD was trading for a couple days ago. But this right here is 3 actual quarters of data and 1 estimated quarter of data. We can see the year-over-year growth is 13.1%, and we would receive $53,000. Now, my assumption for quarter 4 will pop over here. You can see the quarter-over-quarter growth here. In quarter 1, it paid 2% more than the quarter 1 the year before. In quarter 2, it paid 24% more. And this recent quarter, as I mentioned in this video, it paid 15.3% more quarter 3 this year compared to quarter 3 last year. So these averaged paying about 14% more, 13.9 to be exact. What I did was I just assumed a 10% quarter over quarter growth for quarter 4. This is an estimate, just to be clear. Let's just do this. This is 100%, this is an estimate, and when the actual comes, I'll come fill it in. But conservatively guessing 10%, this is what the picture would look like. This will be, whatever it is on the last day of the year. This is always the last day of the year end price. So it'll be somewhere in here. And this right here, if a 10% happens in quarter 4, we'd have over $3 a share, 13% increase, $53,000 a year. And we're simply 12 years into our scenario. We go from $15,900 a year to $53,000. Inflation, get out of the way, I run this. You know, I wanted to do a mic drop after that last statement. I'm kind of mad at myself for not pre-planning these. I just shoot from the hip. I should also mention, you almost have $1.5 million of value in addition to getting this ridiculous cash flow. And this is why I always stress SCHD over bonds for long-term investors that are okay with a little fluctuation of principal. You have $1.5 million. So this has gone up 3 times. This has gone up almost 3 times. Hence that yield always stays the same. Vanity metric. The total returns haven't been fantastic over the past few years, but come on now. We're eating good. Oh, and for that last piece of news, 3-for-1 share split. SCHD is scheduled for a 3-for-1 share split on October 11th. Share splits do not have an impact of the total market cap for a stock or an ETF. If you currently hold SCHD, like I do, we will have 3 times as many shares after the split that we do now. If you have 1,000 shares of SCHD right now, after October 11th, you'll have 3,000 shares. But each one of those shares will be worth 1/3 of what they used to be. So your total value will be identical. I do view share splits as a net positive overall because it makes the ETF more attractive for new buyers. Buying a share of SCHD feels better at $25 a share compared to $75 a share, even though you get the exact same portions of all the underlying holdings. It's more attractive, particularly for new investors or investors that have smaller overall portfolios. And if your online broker does not allow fractional shares, most of them do at this point, but if it doesn't, it allows you to put more dollars to work at all times. I always use the Vanguard S&P 500 ETF, VOO, V-O-O, for my example on this one. If you had $450 to invest into the market and you wanted to buy VOO, you could buy exactly 0 shares. This is assuming that no fractional shares are available, or you have severe OCD like me and you avoid fractional shares like the plague. As I mentioned earlier, I do think the share split is a good thing, and it will bolster the popularity of SCHD to the masses. And I wanted to mention real quick, and I won't go into a nerdy screen share for this one, I just want to explain it. If you're thinking about the dividends of SCHD, there's also no change to that. You'll now have 3 times more shares and they're worth 1/3 each, and it'll still pay dividends on a per share basis, but all the historical information, the historical data will be split adjusted. So if you receive 75 cents per share in a prior quarter, it will now show that you received 25 cents per share for that quarter. So when the new one is 28 cents or 30 cents a share, instead of being like, oh, that's horrible, that's like 1/3 of what it used to be, it will adjust all of them moving backwards. So it'll still be, a 10% increase or whatever it would have been. So nothing changes on the key metrics or the financials of the company, besides the outstanding shares, of course, and the price per share. But even the per share metrics that you care about, like EPS, earnings per share, or dividends per share, will all be split adjusted in hindsight. Okay, to land the plane here, I might have been a little repetitive in this one, it's a little more from the hip. Not a huge deal, but still an overall positive because you either don't care because it doesn't affect anything, or you're really excited at the more affordable shares. Perception is everything. And I'll take it. Buy up those shares and increase my value, please. I appreciate you sticking with me till the very end of these 2 major SCHD updates, and check out one of these 2 videos to continue down your path to financial freedom. Thanks for watching, and I will see you here in the next one. Peace.